Okay, in this video we're actually going to talk about setting up a payment plan with the IRS to pay off your past due taxes in installments rather than all at once and get a fresh start with the IRS on your past due taxes. The IRS has some new installment agreements or some new terms for installment agreements that they have come up with in their Fresh Start program. If you're not able to pay your tax debt in full, you can set up a payment plan with the IRS. The IRS is actually going to calculate and include interest and penalties into your payments that you pay every month. But for small businesses and individuals, including married couples, that would benefit from paying their past due taxes in smaller, more manageable payments, there are some exciting new options with the IRS Fresh Start program. Small businesses. A small business that currently has employees, is actively in business, and owes past due payroll taxes can qualify for an in-business trust fund express installment agreement. Financial information, financial statements, and financial verification are generally not required for this type of installment agreement, but certain eligibility criteria must be met. So what are the eligibility criteria for small businesses? Well, the total amount owed by the business at the time the payment plan is set up cannot exceed $25,000. The total amount of past due tax plus interest and penalties calculated by the IRS and added to the balance must be paid in full with a payment plan over 24 months or less. If the amount the business owes is between $10,000 and $25,000, then payments must be done by an automatic debit from a business account. The business must remain current with their future filing and payment requirements. In other words, the business cannot get further behind on its tax obligations. Now, there is a new streamlined installment agreement. It's available for individuals, including married couples, that have any type of past due tax. It's also available for any type of defunct business, a business that's no longer in business that has any type of tax debt. It's also available for businesses that are currently operating, still in business, but for their past due income taxes only. Instead of the payroll taxes, only the income taxes that they owe would qualify for this type of payment plan. Now, financial information, financial statements, financial verification, again, are generally not required to set up this type of payment plan, but certain eligibility criteria must be met. The eligibility criteria for streamlined installment agreements are: 1, the total amount that at the time the payment plan is actually set up cannot exceed $50,000. The total amount of past due tax plus the interest and penalties calculated by the IRS and added to the balance must be paid in full with a payment plan over 72 months or less. If the amount owed is between $25,000 and $50,000, then payments must be done by an automatic debit from a bank account. The taxpayer also must remain current with future filing requirements and payment requirements. In other words, they cannot get further behind on their tax obligation. Now, interest and penalties. The IRS is going to add interest and penalties to the total amount you owe at the time you set up your payment plan. The total amount of your payments at the end of your payment plan will be greater than the amount of tax you owe when you set up the plan because of those penalties and interest that they add to the balance. Oftentimes, the added interest and penalties can make the monthly payments harder to manage. So there are other payment plans available. If your situation doesn't meet the qualifications for one of the payment plans discussed, there are others available, such as a complex payment plan for past due taxes that exceed $50,000, a partial payment plan where financially strapped taxpayers can pay a portion of their past due taxes and then the rest of the balance is wiped clean. There's also settlement offer payment plans where you can negotiate a settlement with the IRS for less than the full amount that you owe and then set up payment arrangements for that settlement amount. Now, a lot of people want to know, can I do this on my own or do I need professional help? Well, it's going to be based on your situation, how complicated it is, how comfortable you are with these type of financial matters and dealing with the IRS. If you feel like you can handle it by yourself, you can just visit the IRS website at irs.gov, click on the Forms and Publications tab right there on the front page, and find Form 9465 for payment plans when you owe $25,000 or less, or Form 9465-FS for payment plans when you owe more than $25,000 in past due taxes. Now, most taxpayers are really going to be best served by hiring a qualified and experienced professional or firm, because there's important eligibility and legal requirements that will help you achieve the most favorable and manageable result while still preserving your rights. And sometimes negotiating a manageable and affordable payment arrangement with the IRS can get sticky for several different reasons. Now, if you're unsure about your situation or would like a professional opinion as to what your different options are, just by watching this video, you're entitled to a free consultation by the Lazat Law Group. So visit the Lazat Law Group at getllg.com. There's a tab there. You can click on the tab for a free, no risk, no obligation 30-minute consultation to discuss the different options available for your specific situation. Now, this is going to be a phone consultation, so you can be located anywhere in the United States and its territories.